For more on a data center build-out in the AI space, Bank of America Securities' Andrew Obin joins us here on set. He is the firm's senior industrials analyst. Andrew, great to have you with us.
Thanks for having me.
We didn't chat too long ago, and yet it feels like a lot has changed in terms of the announcements that we've gotten from CES, for instance. The perception that perhaps there won't be as much cooling needed. How do you sort of take what has happened in this space and integrate into your views of these, in particular, cooling companies like a Trane?
Yeah, sure thing. So where I would start is that we're in the midst of massive technology change driven by NVIDIA as Jensen is building moat versus the competition. And our thesis is that big players in the industry, both on the HVAC side and electrical side, are partnering up with the data centers to drive this technological change. And the moat is the pace of the technological change. So we think there will be a lot of news over the next couple of years as we're transitioning from GBX rack to Kyber rack, right? And as we're going from Blackwell to Rubin, and then we're going to go to Feynman chip. And each one of these steps requires very, very massive change in technology that supports the data center infrastructure. I just think there's going to be a lot of noise. Okay. And I think the answer is stick with the big players, because what the data centers want, they want to partner up with people who can design, install, commission, and service the equipment. That's the moat. And I think the market is missing it. There's a lot of note. What Jensen said is effectively you can run chips now with water at 45 degrees Celsius. So all of a sudden people say, hey, maybe you don't need these water-cooled chillers. It's much more complicated, effectively, because if you run a data center in Texas on a hot day, your temperature outside is going to be 45 degrees Celsius or 115, 120 degrees Fahrenheit. And frankly, there is no other way of getting heat out of data center efficiently other than this large water-cooled chiller. Right. Now, does this mean that for this iteration, there probably less chiller content per megawatt? Probably, but there are offsets because you actually now need to put more stuff on the roof. I think generally it's noise. And the thing to keep in mind, Trane is sold out on water-cooled chillers for the next 2 years. So looking from the outside, you're not even going to see it, right, in the earnings. But it's something to get excited, right? There are these rapid technological changes. You have to follow them. Creates a lot of volatility around these stocks. But I think that's how we look at it.
And I would imagine on top of the actual components being sold, there's a services part of the revenue stream, right, that is more consistent. So that offers you sort of
well, that's
balance.
Exactly right. Yeah. And then you have to think, okay, well, Trane or JCI, they put this equipment over the past couple of years is going to start getting service towards the end of the decade, right, in volume. The other thing what I would also say is that JCI, Trane, they always talk to the likes of Meta, AWS, right, Alphabet. And those guys do know what the technological path is. Right? I mean, they knew a couple of years ago. So, we're acting that this is like brand new, development, and all of a sudden, all this capacity that was put in is just going to go poof. The reality, right? NVIDIA has given a roadmap to hyperscalers 12, 18, 24 months ago, and everything they're ordering today is to be built in 26, 27. Right? So just keep that in mind. I think, people just get very, very excited around these announcements.